Imagine having a financial advisor who never sleeps, never takes vacation, and knows your spending habits better than you do. Sound impossible? Artificial intelligence is revolutionizing how we manage our money. And if you're not paying attention, you're leaving cash on the table. Today, we're diving deep into how AI is transforming personal finance and what it means for your financial future. Let's start with something we all do daily: spending money. Traditional budgeting meant tracking expenses manually, categorizing purchases, and hoping you remembered everything. AI has flipped this completely upside down. Smart algorithms now analyze your spending patterns in real time, automatically categorizing transactions and identifying trends you never noticed. Take expense tracking apps like Mint or YNAB. They use machine learning to recognize when you buy coffee at that corner shop and automatically label it as dining out. But it goes deeper. These systems learn your habits so well they can predict when you're about to overspend and send alerts before you swipe that card. The real game changer is predictive spending analysis. AI can forecast your future expenses based on historical data, seasonal patterns, and even external factors like gas prices or market conditions. This means you can prepare for financial challenges before they hit your bank account. Now let's talk about something that traditionally required expensive financial advisors: investment management. Robo-advisors are democratizing investment advice using sophisticated AI algorithms. Platforms like Betterment, Wealthfront, and Charles Schwab's Intelligent Portfolios manage billions in assets using AI-driven strategies. Here's how it works. AI analyzes your risk tolerance, financial goals, time horizon, and market conditions to create a personalized portfolio. But it doesn't stop there. The system continuously monitors market movements, rebalances your portfolio automatically, and even optimizes for tax efficiency through strategies like tax loss harvesting. What would have cost you thousands in advisor fees is now available for a fraction of that cost. Some robo-advisors charge as little as 0.25% annually, compared to traditional advisors who might charge 1% or more. For a young investor, that difference could mean hundreds of thousands of dollars over a lifetime. The AI also removes emotional decision-making from investing. When markets crash, human psychology often leads to panic selling. AI stays rational, following predetermined strategies, and sometimes even identifying buying opportunities when others are selling. Let's address the elephant in the room: AI and credit. Your credit score impacts everything, from loan approvals to insurance rates. And AI is revolutionizing how lenders assess creditworthiness. Traditional credit scoring relied heavily on payment history and credit utilization. AI models now analyze hundreds of alternative data points. Some fintech companies use AI to evaluate bank transaction patterns, social media activity, education history, and even smartphone usage patterns to assess credit risk. This is particularly beneficial for people with limited credit history: students, immigrants, or those rebuilding credit after financial difficulties. AI-powered credit monitoring services can also predict changes to your credit score before they happen. They analyze your spending patterns, payment schedules, and credit utilization to forecast score movements, giving you time to make adjustments. But here's where it gets really interesting. AI can help optimize your credit strategy. Some apps analyze all your credit cards and recommend which one to use for each purchase to maximize rewards while minimizing credit utilization impact. Fraud detection is another area where AI truly shines. Financial institutions use machine learning algorithms that can identify suspicious transactions in milliseconds. Systems learn your normal spending patterns, where you shop, how much you typically spend, what time of day you make purchases. When something doesn't fit the pattern, the AI flags it immediately. If you usually buy coffee in New York, but suddenly there's a transaction in California. The system knows something might be wrong. The sophistication is remarkable. AI can even detect subtle changes in typing patterns when you enter your PIN or password. For consumers, AI-powered apps can monitor all your accounts simultaneously, providing a comprehensive view of potential threats. Some services use AI to scan the dark web for your personal information, alerting you if your data appears in places it shouldn't. The speed of AI fraud detection has dramatically reduced financial losses. While human analysts might take hours or days to investigate suspicious activity, AI can freeze accounts and prevent fraudulent transactions within seconds. Personal financial planning has traditionally been a complex, time-consuming process, requiring spreadsheets, calculators, and often professional help. AI is changing this dramatically through intelligent financial planning platforms that can model complex scenarios instantly. These systems can answer questions like, if I increase my 401k contribution by 2% and pay an extra $200 monthly on my mortgage, how will that affect my retirement timeline? The AI runs thousands of simulations, considering variables like inflation, market volatility, salary growth, and life changes to provide comprehensive answers. Some AI planners go further, integrating with all your financial accounts to provide real-time recommendations. They might suggest moving money from a low-yield savings account to a higher-yield option, or recommend increasing your emergency fund based on changes in your income stability. The democratization aspect is crucial here. Professional financial planning often requires significant assets to justify the cost. AI-powered planning tools provide sophisticated analysis for free or at very low cost, making comprehensive financial planning accessible to everyone. Let's talk about the risks and considerations. While AI offers incredible benefits, it's not without challenges. Privacy is a major concern. AI systems need access to detailed financial data to work effectively, raising questions about how this information is stored, used, and protected. Algorithm bias is another issue. If AI systems are trained on historical data that reflects existing inequalities, they might perpetuate or amplify these biases. This could affect loan approvals, insurance rates, or investment recommendations in unfair ways. Over-reliance on AI is also a risk. These systems are tools, not replacements for financial literacy. Understanding basic financial principles remains crucial, even when AI handles much of the heavy lifting. You need to understand what the AI is recommending and why. There's also the question of system failures. What happens when the AI makes a mistake, or the platform experiences downtime? Having backup plans and understanding manual alternatives remains important. Market conditions can change rapidly, and AI systems trained on historical data might not perform well during unprecedented events. The 2020 pandemic market volatility, for example, challenged many AI trading algorithms. So, how can you practically implement AI in your personal finance journey? Start simple. Begin with a budgeting app that uses AI for expense categorization and spending insights. Popular options include Mint, Personal Capital, or YNAB. For investing, consider opening a robo-advisor account with a small amount to test the waters. Most platforms allow you to start with just a few $100s. Watch how the AI manages the portfolio and compare performance to your existing investments. Credit monitoring with AI features should be a priority for everyone. Services like Credit Karma Experian or specialized AI credit apps can help you stay on top of your credit health and catch issues early. If you're ready for more advanced features, explore comprehensive financial planning platforms that use AI. These might include goal-based savings recommendations, tax optimization suggestions, or retirement planning scenarios. Remember, the key is gradual adoption. You don't need to revolutionize your entire financial life overnight. Pick one area where AI can provide immediate value. Learn how it works, and gradually expand your usage as you become more comfortable. The future of personal finance is undeniably intertwined with artificial intelligence. We're moving toward a world where your financial assistant knows your goals, understands your constraints, and works tirelessly to optimize your financial health. The early adopters are already seeing the benefits: better investment returns, improved credit scores, reduced fees, and more time to focus on what matters most to them. The question isn't whether AI will transform personal finance. It's whether you'll be ready to take advantage of these powerful tools. The technology exists today. It's accessible, and it's getting better every day. Start exploring AI-powered financial tools today. Your future self will thank you for taking control of your financial destiny with the most powerful tools available. Don't forget to like and subscribe to KB Bluetree for more insightful content that helps you navigate our rapidly changing digital world. What AI financial tool will you try first? Let me know in the comments below. And remember, your financial future starts with the decisions you make today.